if you give these AI models, call it more time to do the work, they will produce answers that don't hallucinate.
And to make it clear what's going on, like if you were playing with older generations of large language models, like say ChatGPT 3, 3.5, 4, like a way people would hack them would be by prompting them to say, okay, ChatGPT, go step by step, think through the logic, and come up with your answer. And now reasoning models, like the latest evolution of models from Gemini, Alphabet, from OpenAI, Anthropic, they have reasoning almost kind of built in. And the way the models are designed is to do exactly that. And some of them show you their train of thought and how they've planned to answer the question and how they kind of check themselves as they go along.
This is Wall Street Wildlife. Before we get to this week's show, a short word from our sponsors.
All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account 6% or higher yield that remains locked in even if the Fed cuts rates.
What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset's moving, so you can actually understand what's driving your portfolio performance. Public is a FINRA-registered, SIPC-insured, US-based company with a customer support team that actually cares.
Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description. For an advertising-free version of the show, check out patreon.com/Wall Street Wildlife.
Welcome to the latest Wall Street Wildlife with Christoph and Luke. In today's episode, what is DeepSeek and why is it threatening to wipe $1 trillion off of US tech stocks? Also, how the UK government is preparing for dystopia, a presidential crypto circus, and we go on stock safari with cloud computing and sausage rolls.
Damn, Badger, you're looking beautiful this morning. I'm glad to see that you're, yeah.
We're talking
I
about.
see like 3 more whiskers. You added 3 more whiskers
That's
to the
right, yeah.
farm.
Actually, I had to trim it. The other day because it's getting a bit wiry. It's so thin. But this is the final day. We're recording on January the 27th, and I've got to have this travesty of a thin ass beard off my face before my wife arrives in Chamonix on the 1st of February. So I'm going to go shave immediately we finish recording this episode. I think I achieved my objective though, which is demonstrating I cannot grow a beard. But at least now you believe me.
There's something definitely that's quite rakish to you because you're always so polished and smooth, and this gives you a little bit more street cred.
And the sacrifice
Anyway,
of cred for the sanctity of my marriage.
a committed husband indeed. Glad to also know you're still alive and haven't fallen off some cliff in the Alps, even with your new anti-avalanche jetpack thing.
Yeah, I'm all good. Actually, I've been a bit lazy. I've had 2 days off, and I currently have a day off because it's just bucketing down with rain in the mountains right now, which is not a good thing. So yeah, happy to spend the day on the sofa reading and catching up on what's been happening in US tech because it's been quite an exciting weekend.
Yeah, so let's get to it, right?
We should say in preface to this, Christoph and I recorded an interview with Chit Chat Stocks, which is an awesome podcast that we're both great fans of, with Brett and Ryan. And we recorded 3 days ago, and then the world changed quite a lot in the last 3 days. So if you're listening to us on the Wall Street Wildlife feed, you're probably going to hear today's discussion, and then next week you're going to hear the Chit Chat discussion. So just bear that in mind that they're back to front, because what we say now is fresh tomatoes, and what we say next week potentially might be looking like a poor take.
Right, and a quick shout out to our Patreon community. over at patreon.com/Wall Street Wildlife. That's where you can find Badger and Monkey talking about the latest stuff pretty much near real time in our community forum. So if you don't want to wait the weeks to get the newest podcast update on YouTube or wherever, then head over to patreon.com/Wall Street Wildlife. Okay, how do we start? So it is Monday, January 27th, right? And the markets just opened after the big news dropped this weekend. And the most interesting fact is at the moment, NVIDIA is down about 12%.
That's relatively substantial.
And the reason it's substantial is not because 12% exactly is substantial. I mean, now in the quant days, there's big moves just on pricing wars, like the computers doing their thing. That's not the issue. The issue is when you're a $3 trillion company and you lose 12%. That's like the equivalent of I can't do the math live. It's too early in the morning, but like
It's a chunk of change, but it's also impactful because like the whole market is almost held up by AI and NVIDIA. And over the weekend, it seems like tech investors are panicking that like the AI party might be over. And so it's not just NVIDIA that's dropped. We've seen a retraction in valuations across like the NASDAQ, across all tech stocks.
Our main objective with this episode is to walk you through, hopefully on the pretty deep level, what's going on and what we have to think about. And I don't know if you know this, Badger, I am wearing my dodo hat this morning instead of typical monkey hat, and it's because NVIDIA's going out of business, buddy. It's done.
That is such a freaking premature judgment to make. Now, we've both been looking at this topic separately, and I got a funny feeling we've got a different take on this, and we don't know what each other have to say. So we're going to have this conversation live. But you've been doing a ton of deep research all morning and yesterday. So why don't you give us the grounding in what's actually happening?
Okay, there's so much to say. I want to say it all at once. One more backstory. It was because of the Chit Chat Stocks podcast. I had just spent the previous 2 weeks really brushing up on the NVIDIA case, and that was mostly bullish. I left doing that research feeling really excited about NVIDIA. It's shocking that 2 days later now I'm like, I'm really not sure anymore in this moment. For that kind of fast pivot to happen is kind of like, it's boggling. My mind's still spinning. So here's the deal. I'm going to need to lay some basic foundational explanations on the tech because not everyone's an expert in this stuff. In fact, I think few people are. So AI, when we talk about AI and language, basically the AI that you're familiar with, right? Like ChatGPT, all the models that most people are using on a daily basis. You have to know that basically there's two parts to it. There's the training of the model, which I think of as ingesting and reading all the books or all the articles, right? Which takes massive computing power. And then there's the second half, which is now that the model is trained, it has to spit out info called the inference portion, right?
Yep, that's a good analogy, precisely.
When thinking of these things with regard to tech, that first half, we've kind of come to the conclusion that there's a limit to it because the amount of information that exists in the world is, you could say, for simplicity's sake, most of it has already been uploaded. Even though that took a massive amount of computing power, it's kind of we're now at the point of, call it, diminishing returns, right? But it took
only in terms of, say, the written material, because you're right, like most of these models have been trained on like the entire public internet, but like models are now being trained on like video and audio and other formats as well, and like real world, like through cameras. So if you think about training in that respect, like we've barely scratched the surface.
That's right. So but this first half was, I think, always known ahead of time that we're going to reach some modest limit of more computing power, if you throw at it, won't really make much of a difference because most of the information is already, call it, in the computers in the way I'm talking about it. So that was called the scaling law, and that was already known. And it's kind of like thinking about these models as being commodified. And it's true. We all technologists knew this was going to happen sooner than, I mean, eventually, call it, right? But then there's this next bit, which has to do more with the inference part. And there's what's now known as a new scaling law, which depends on something called chain of thought models. In this, now we've seen people playing with this stuff realize that if you give these AI models, call it, more time to do the work, they will produce answers that don't hallucinate.
And to make it clear what's going on, like if you were playing with older generations of large language models, like say ChatGPT 3, 3.5, 4, like a way people would hack them would be by prompting them to say, okay, ChatGPT, go step by step, think through the logic, and come up with your answer. And now reasoning models, like the latest evolution of models from Gemini, Alphabet, from OpenAI, Anthropic, they have reasoning almost kind of built in. And the way the models are designed is to do exactly that. And some of them show you their train of thought and how they've planned to answer the question and how they kind of check themselves as they go along. And these are definitely producing higher quality results.
Right. And this matters, though, because whereas that first portion I said kind of runs into a natural limit, this bit of AI modeling requires the more compute power you throw at it, the better it becomes. So in this new scale, yeah, more is still better. You want to keep pushing as much hardware at the problem as possible. So far so good, right? And by the way, this stuff that I'm talking about is kind of reserved for what I call genius level use cases, but that's where things are going. Like if you know a medical procedure depends on getting the exact right answer, or some legal case depends on getting the document exactly right, you need as much of this fancy thinking as possible. Good enough is not good enough, right? So again, translate to GPU hardware, more is still better.
Yep.
Okay, that's the sort of background. So given this, up to now, I'm going to start talking about NVIDIA because that's really the use case, right? That's the problem we're trying to figure out. Is NVIDIA in trouble or not? So NVIDIA has had a huge advantage up to now. What allowed it to have the 90% margins in this space mostly is that I said in the episode about NVIDIA that the CUDA software programming language is their moat. Translated into English, CUDA is a, call it, programming language. Technically, it's a driver that allows software to communicate with the GPU chips. And NVIDIA basically has a monopoly on this. The world's leading experts with AI all use this programming language. It's only on NVIDIA that it exists. The other advantage that NVIDIA has is that they knew ahead of time that they needed to find a way to interconnect all of the GPUs so that they all basically form a way bigger brain than operating alone. They made this brilliant acquisition of Melanix for about 7 billion, and they were right. And NVIDIA is where it's at up to today, right? But this is where it gets interesting. That's kind of the bull case. I don't know if you want to add something to that. Like they have the lead in terms of engineering, the program. More is better still.
Let's recap the conversation we had with Brett and Ryan on Chip Chat Stocks, right? Like the whole world now is being driven by this idea that AI is going to become increasingly capable, move beyond the confines of like the digital world into the real world and start driving cars and piloting robots around your home. And like AI will get baked into everything. And the thesis for NVIDIA pretty much is that they have the best software, as you just described, CUDA, but also the best hardware. And together, That's almost an unassailable moat over competing hardware designers. Because remember, NVIDIA designed the chips, Taiwan Semi manufacture the chips using machines created by ASML. So you got this like supply chain that's creating like the tools that will allow all the AIs to run and do stuff that should make all of our lives easier, better, faster, more efficient, help companies generate more revenues, create efficiencies. Like this is like the oil in the whole stock market right now.
That's right. And spent a lot of time on our NVIDIA episode talking about the softer side, the more intangible qualities about NVIDIA. In short, they have a superior culture. They have the smartest people. They're workaholics. So their lead seemed until 3 days ago like insurmountable, right? For all the reasons that we talked about. I mean, that bull case for NVIDIA is really, really powerful and seductive, right? Because the whole world, like, no one is denying that AI is just, it's completely going to revolutionize everything in test cases and use cases we can't even dream of. So when you're the market leader and you have such a incredibly, what's it called, process by which you're out hustling all your competitors, and like it's just hard, right? It's hard in many ways. It's hard to overcome such a lead with so many assets on your balance sheet. And now, shockingly, here we are going to talk about how in fact this might be a peak. That's what I'm going to try to walk through. I mentioned this too on the podcast, that capitalism, under capitalism, anytime you have a monopoly, you also have a giant target on your back. When your particular monopoly, as in NVIDIA's case, runs the whole world, potentially, nobody, right? Like nobody besides NVIDIA wants that, because as we're finding out, they could charge whatever they want. There's also saying the market will find a way to to surmount the insurmountable,
Mhm.
what seems like the insurmountable. And so this is what I learned recently that I did not know just a few days ago. NVIDIA now has a hardware threat. The threat to NVIDIA is coming from multiple potential paths. Let's talk about the hardware first. There are now companies with massive amounts of resources that are actually designing chips in a very different way from the way NVIDIA designs them, that kind of solves for their moat. Let me be more specific. One of these companies is simply making bigger chips, like much bigger. So I don't know when you look at these things, they're like what, like an inch or so. Like most of them seem like they're kind of like 1 inch by 1 inch square, or maybe a little bit bigger, right?
Yeah,
Give or take.
but like NVIDIA packaged them with like hundreds on like a giant board, and then they
Yeah,
layer those boards in like a massive server. So you have this like city block full of those little like postage stamp
yeah.
chips, GPUs. Yeah.
So a company is now companies. The specifics here don't really matter. Are just making their chips, figured out to make them way, way bigger. And now that might not seem like a big deal, but what it actually does is it solves for what's known as the interconnect problem. That, remember, one of NVIDIA's moats is that they figured out how to connect all the GPUs together, right? But that's not a simple problem to solve unless you make bigger chips, which means they no longer need to be connected to one another because each one is so friggin' large. So that's a hardware solution to NVIDIA. That's one. There's another solution that I came across. I really hate getting too technical with the jargon, but it depends on something called the TPU, the Tensor Processing Unit, which is designed, so to speak, for exact mathematical operations. That, unlike traditional GPUs, where the exact timing of things can vary, these chips perform the operations exactly, predictably the same way each time. The reason that's important is because that helps the inference bit of the AI solution. So, in other words, they've created a new kind of chip. Call it an advance of GPU. So CPU, GPU, TPU, right? And NVIDIA does not have call it a monopoly over TPUs. That makes sense?
Yeah, and to clarify, like a tensor processing unit, it's kind of like a type of GPU. It's essentially doing the same sort of thing. And companies like Alphabet have their own line in TPUs that they manufacture. They put in like phones, and they're starting to use in their data centers too.
Another takeaway for me is NVIDIA has the moat, but their moat is GPUs, but now a new kind of unit is coming across where NVIDIA no longer has the unassailable moat, potentially, right? So that's the hardware, I would say the hardware short case. Okay. And we also need to acknowledge, by the way, that all of the big boys, other Mag 7 companies with what massive resources, Amazon, Google, Microsoft, Apple, Tesla, they're also developing their own chips internally, and they have the resources with which to do it, right?
Yeah.
So when NVIDIA has 90% margins, those guys are like, Okay. Point two is NVIDIA is an IP company, which is a fascinating thing to acknowledge, right? Their $3 trillion market cap rests on the propriety of their engineering designs, but who actually makes the chips? TMC and ASML. And one of the ways that NVIDIA got to the very top was by poaching the most brilliant minds from other companies like Intel over the, call it 20 years of their ascendancy. Well, now think about this from the other way. The major fab companies on whom NVIDIA depends, they die without them, all of a sudden have massive cash flows. They're the ones that make the stuff. What prevents them from saying to the most genius level chip designers, hey, come work with us, and help us make our own stuff? It's just worth noting. I'll say this. It's worth noting that NVIDIA is not vertically stacked, and it's a kind of risk to say in a brutal capitalistic framework, you never know when, say, money is gonna kind of take your best people away and sabotage, the way it works. And I argued against this myself on the Chit Chat episode. Anything you want to add to that?
Well, you haven't got to the meat yet, right? The thing that's actually changed, which is really the bit where we're going to debate, I think.
Oh yeah. This was just me talking about the hardware stuff, right? So so NVIDIA has things to consider from the hardware.
And everything you said so far, like those are known risks to any NVIDIA investor who's done the homework, and that's been known for years. Yep.
Correct.
Yep.
It's just that, I would say it's just that now the risks are more visible. They're being quantified. The products are now, in hand within other companies as opposed to theoretical. Okay, anyway, the next risk for NVIDIA has to do with the software side of things. Hopefully I don't have to go on and on for too long about this, but CUDA is the software language, and it's proprietary, and they created a moat for themselves by basically ensuring that the world's smartest people only use, by world's smartest people, I mean the world's most important GPU designers are only using this language. So it's sort of like the network effect we see with something like Facebook, right? You're not going to use the other guy because there's nobody doing it over there, right? So you go where everyone's doing it, which is a CUDA. Okay. But we now know that while AMD itself had a pretty awful product that nobody wanted to use, that product itself is getting better. And we also know there's a bunch of people creating a kind of more open source version of CUDA, and they're doing it via different kinds of systems, a different one at Apple, a different one at OpenAI, different one at Google. And so that whole, it's the same point with the hardware, but again, with the software. When you have a monopoly, people are going to figure out a way around it. And it hasn't happened yet, but it seems like in the next year or two, there might be some inflection point where enough developers are now using the alternate products and it's good enough, and then the monopoly breaks.
Yeah, and
the last
not to lean on that point too much, but the one you didn't mention is Meta, with Llama, and actually that is like an open source framework for developing AI applications that has actually got really wide acceptance already today.
Yeah, so it's coming from different directions.
Yeah.
And the last point is that CUDA itself, and this is so far beyond my pay grade, but my understanding is that CUDA itself might get abstracted. So the last point is that CUDA itself might be abstracted, which means that without getting too deep into the technical stuff, that everybody learns how to use CUDA because it just becomes another layer to the stack, and I can't explain it to you on a coding side. So just assume that there's merit to that. So that takes us to the big news of today, which is the release of a new model, new AI model called DeepSeek. Badger, do you want to maybe, since I just yapped a bunch, give us the sort of background stuff about your understanding of what was released and why this matters, and I'll fill in the other more technical details?
So actually, DeepSeek have been around for a little while, and I think they were like a small Chinese AI company that I think were founded out of like some like high frequency trading firm, like in the finance world, trying to do stuff faster. But just a week ago, on the 20th of January, they released DeepSeek R1, which is like their latest model. And the reason this has got the whole kind of tech industry attention and really paying attention to what's going on here is, according to all the published benchmarks, DeepSeek R1 is giving almost as good results as one of the industry leading models, O1 from OpenAI, although OpenAI have O3 as well. So it's giving like at par pretty much with the best models we have, but at far less cost, i.e., like much less processing time, both for training and critically for inference. And so the reason that's got tech investors interested is like everything we said for the last half an hour was about NVIDIA and AI and ever increasing demand for more and more like AI chips to do all the AI stuff and make the world work. Well, maybe there is still a ton of efficiency to be had by improving the software, which is what essentially DeepSeek R1 has done. And you can do so much more with less. And maybe that means we don't need as much AI hardware as we all thought we needed.
Right. So a couple of critical views. This is a Chinese company, so bear in mind that as a Chinese company, we always have to put asterisks whether what we're seeing is like legit or whether there's closed manipulation. So just that's important to know. But
But just on
uh,
that, like I think that's true, and that's a good guideline if you're investing in Chinese stocks. As I was, and I sold a bunch recently. But this DeepSeek R1 is open source, so actually, maybe questions about how they built it and did they build it as efficiently, like do the training as efficiently as they claim, but the inference, like the efficiencies are real because people can run it and they can go, oh heck, this actually does work, gives me the same results at much lower cost.
yeah, absolutely. It's just a little bit of a gray area, but in the end, the results are what speak for themselves. Two, that efficiency you were talking about is staggering. From what they say, they did this with fewer than 200 employees. So that's tiny relatively to all the mega corporations that have AI departments.
Well, I don't know that number of employees is like a relevant metric necessarily, because like the world, everyone stands on the shoulders of giants all the time, right? So and we talk often about like a solopreneur building a potential $1 billion company. So I don't think the number of engineers necessarily, you could have like 10 super smart guys, and I'm sure they could build a better model still.
Yeah, I don't disagree. I think it's just a relative comparison that for something that shakes the world, when we're talking about trillions of dollars, it's relatively a small number of people.
Yeah.
So not a major point, but the bigger point is that it costs approximately 5 million to train versus the scale of 100 million for the other guys. So that's about 45 times more efficient. I mean, the math, like, it's just a shock. It shocked the world. The efficiency bit is what shocked the world. And they did it, like you said, by being more clever rather than being more powerful. In essence, that's right. That's one of the main takeaways. And the way they did this on the technical side is they basically figured out that once you're dealing with inference stuff of the model, that you can sacrifice absolute precision for something we could say is good enough. And if you let enough good enoughs work together in more clever ways, the output will still be stupendous, even though it's not like precise to the last decimal point. And that's what allows for so many of the efficiencies.
And I ran into a really nice analogy somewhere on Twitter, so I can't attribute this. It wasn't my idea. But if you think about, let's say, OpenAI's ChatGPT latest model, like they've trained the model, and it's almost like you could imagine they've got this AI with like a world-class like lawyer, doctor, engineer, biochemist, physicist, like every discipline, because you've got all the knowledge in there. And at inference time, i.e., when you go on there and you ask your question, it's like the model asks all of these different experts and tries to come up with the best answer. And the innovation in DeepSeek R1 is that at inference time, when you ask the question, it kind of figures out which of these specialists is going to give you the best answer. So if you're asking like a legal question, it'll use like the legal part of the model, and it won't activate the mass of the rest of the model that's actually not going to be that relevant to the specific question you're asking. So it's like having like a phone book with all of these experts in it, but you only call up the ones that are actually going to give you an answer. They're actually going to help you answer the question you're trying to answer.
Right. So I think we've gone into the technical bit from all sides, right? Enough. The punchline here is this is what it comes down to. You now like people running Facebook and all the Magnificent Seven now know, because they, like you said, could look at the open source code, that they could get amazing results for 95% the price, cheap, off, right? Not whatever the discount is, massive discount, right?
Yep.
So how now in this moment do the CEOs of those companies justify paying NVIDIA whatever the price NVIDIA was charging when this little guy, they could get it for free? That's the open question right now in the moment that the market is trying to figure out.
And I think it shined a real light on this question, but it's not a new question. Like we've always known that like there are multiple ways to get efficiencies, either with like better, faster hardware, or chucking more hardware, or asking the questions in a smarter way with better software. And it was always clear that there were efficiencies to be had in the software. It's just that DeepSeek R1 a week ago has suddenly done it. They've actually delivered a really substantial software efficiency just by designing the system differently. And that means, and as you say, it's open source. That means like if we put NVIDIA aside for a minute and we just talk about, let's say, like the main buyers of NVIDIA hardware, say like the Metas and the Amazons and the Googles and these guys, Apple, they build their own models so they can leverage the open source techniques that DeepSeek have shown off into their own models. And then without having to go and buy a ton more hardware, they can, in theory, do a ton more with what they have. So this is actually, I think, going to be good for the model providers, like those guys, the hyperscalers, and it's going to be especially good for all the businesses and like you and I, people who are trying to use AI to either make our lives more efficient, or if you're a business, generate more revenues, because you're going to get all of this incredible capability much cheaper. So I think to me, it seems unambiguously good for tech But the question we're facing here is it good for NVIDIA and maybe AMD and Taiwan Semi and ASML, like all the guys who essentially their own product is the hardware this stuff runs on? Because it's a legitimate question. Maybe we don't need as much hardware as we thought we were going to need.
Yeah, and what I think of in this moment is this is still the kind of AI that we know is not human level, because human level has to have the capacity to quote unquote understand itself, which some people say will never happen, and some people, this is the futurists that the AGI moment, right? This great singularity will or won't happen. Well, when you have leaps like this, you all of a sudden have to think like, oh shit, it might be sooner than we think. I want to actually read one quote from this long essay I read to prepare for this, one of the sources I used, because I think it's really touches this key point. We're going to have a link to this source in our show notes. Quote, with R1, DeepSeek essentially cracked one of the holy grails of AI, getting models to reason step by step without relying on massive supervised data sets. Their DeepSeek R1 Zero experiment showed something remarkable. Using pure reinforcement learning with carefully crafted reward functions, they managed to get models to develop sophisticated reasoning capabilities completely autonomously. This wasn't just about solving problems. The model organically learned to generate long chains of thought, self-verify its work, and allocate more computation time to harder problems. So this is that aha moment. And for me, like the conclusion is NVIDIA now a short? Is it a long? I don't know anymore. I'm completely torn and ambivalent, because this makes me think AGI is coming sooner and than we thought, or potentially, and all the use cases like human robots. I mean, I'm sorry, Optimus like robots, they might still need a lot more juice that NVIDIA is the best at. But then there's all the other reasons we talked about why they won't be the only game in town, and it's an issue of margins now coming down, and from a $3 trillion valuation where margins were, as high as they could be, being pressed. Like, is NVIDIA a good investment now?
And I think it is a valuation question, isn't it? Because like when you invest in growth stocks, you're not buying them for the earnings you get this year. You're buying them because you think those earnings are going to compound and grow and grow and grow in the future. And you're buying like all those future cash flows. And up until a week ago, no one could see an end to the growth that NVIDIA was undergoing. Like we chatted about some of the numbers in the Chit Chat Stocks episode. Like NVIDIA is a $3.5 trillion company, or at least it was yesterday, doing like 100% revenue growth. And they were forecasting like another doubling of revenue again and again. So the market expected this train of growth just to continue and continue. And now people are asking skeptical questions, which they should have been asking already, but they're now asking those questions of, themselves when they consider their allocation to NVIDIA if they're an NVIDIA shareholder.
What I want to more than anything else right now is to be a fly inside NVIDIA's headquarters and to listen and hear how Jensen is addressing this. And I don't know to what extent he already knew about it, or no idea. But one thing I learned about NVIDIA is that their core principle is we're 30 days to being extinguished, so we have to always be at the front. I would love to understand their thinking in this moment, whether they feel that they're as confident as they always would be, or whether they're experiencing this as an existential threat.
I don't know about existential threat. I think I quoted Andre Karpathy when we spoke to Brett and Ryan, and his quote was like, because we talked about DeepSeek in that conversation, and his quote was, does this mean you don't need large GPUs to do like large language models? No, but you have to ensure you're not wasteful with what you've got. And this is a good demonstration that there's still a long way to go with data and algorithms. Like he's a super smart guy. And what he's saying there is like, yeah, we're always going to get these improvements and efficiencies. And like in some ways, right, this is Moore's law in action. Like stuff gets we can do things increasingly quickly at lower cost and lower power consumption. And this is just how technology evolves. And here, okay, we've had like a step change because seemingly DeepSeek has just gone, wow, like we can do a lot more with a lot less. But that's, Moore's law, and these improvements, they don't come on this like slow slope. They come all at once. It's like a jagged step, and we've just taken a bigger step. But, maybe this is just the way the world operates.
So, question for you. NVIDIA is down 13% right now, which, is significant. Are you tempted to buy, given everything we've said?
No, because I've owned it for quite some time, since you and I did battle at Seven Investing over who would get to recommend it. And I've been trimming it along the way because of stuff like this, because it has always seemed like it's been a pretty expensive stock. Like, I wish I hadn't been trimming it because it just continued to go parabolic. But now maybe it's going to come back in line. I don't know. I feel like I've got it about the right size in my portfolio, which is like a 1.5 to 2% allocation.
So NVIDIA is one of the stocks I sold out completely from, and then I bought back, my typical one share as a flag, in the portfolio. And this morning, I added an extra share, which I don't know if this is like meaningful at all, but just more like the thinking is okay, 13% dip. I'm basically, to me, trying to explain myself to myself, man, I don't buy the short thesis fully yet. And I just wanted to signal that we've got a long way to go. So I doubled my position to 2 shares.
But still, that's immaterial, right? But you're putting like another marker in the portfolio to go,
Yeah.
I was bullish at this price point, I guess.
Yeah, exactly.
Yeah. Like maybe the question here is, and I don't think anyone can answer this question right now, especially when emotions are running high as they seem to be on Twitter, on X. Like, will this efficiency mean that we need less? And so we use less hardware, but deliver the same thing? Or, as I'm kind of inclined to believe, the efficiency means we still need a crap ton of hardware at an ever increasing rate, and initiatives like Stargate, like the US's push to invest $500 billion in AI over the next couple of years, those are still necessary, but it means we're going to do even more with the hardware that we're buying. Like, suddenly we can deliver far much more in terms of economic benefit, but we still need more hardware to let us do that.
To be remains to be seen, right?
Yeah.
I wonder how this episode will even age in a couple of weeks.
Yeah.
Because we're talking about it like this is the front lines. This is just the sort of first couple of days where everyone's trying to process this.
Well, it's quite interesting, right? Because like on Friday, you and I, we were both relatively aligned, and we told essentially like the bull case for NVIDIA. But then 3 days later, you came into this episode, and the first half an hour was you going on about like the huge bear case around this stuff. So you seemingly have like 180'd, albeit you just doubled your stake. I kind of feel the same from last week to this week, and I'm more optimistic about AI. Maybe it's because I've got a much bigger allocation to me, the undoubted beneficiaries, which are companies like Google and companies like all the small tech companies that are going to use this capability, like Intuitive Surgical, like my biggest allocation to a robotic surgery manufacturer. Like, they can suddenly do more with all the data they have at lower cost, and they can start to like bring like FSD to surgery. Like, I see a huge upside for my tech investments, and my little NVIDIA allocation I'm still positive about. I'm certainly not going to be selling my 2% NVIDIA holding because of this news.
All right, if you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account.
Public is a FINRA-registered SIPC-insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description.
Yeah, that makes sense. I'm glad you said that. From the broad portfolio perspective, this is good news. For me, I think the final takeaway is I am deeply, I'm sorry, I am significantly concerned about NVIDIA's margins going forward. And from such a lofty valuation, that would make the company still a truly brilliant company, but a very poor stock potentially going forward. So let's see what happens.
Yeah,
Woo!
that's a good distinction to draw. Great, still continues to be a great company, but it was an expensive stock, and maybe it even looks even more expensive as a result of the weekend's news.
Right. And okay, let me reiterate one point about that. When your margins are 90% and you get to charge whatever you want, as soon as that shifts even a little, the financial metrics, if it's almost like a death knell to be determined.
Well, we've got a whole other episode to get through. Should we dive into one of our other topics?
Sure. I wanted to say something quickish around crypto. On the one hand, I have never been more bullish about crypto when the president of the United States himself is now as positive for the industry as you can be, making all the changes from people who want to see it dead to people who want to see it thrive. So, on that level, like this is like crypto's new golden era, and we're at the very beginning, right? At the very same time, like I've said all along, crypto itself is a meaningless term because you have the legit projects and then you have the vast majority, which are circus acts, almost literally in existence to bankrupt people. It's like a game of, musical chairs. It's pure speculation, it's pure gambling, it's pure nonsense. And it was just not shocking because we should come to expect this, but right before the inauguration, Trump released his own coin, which made billions. And then in the most like Trump like script, his wife Melania released a coin which made people realize that this is now it itself is a circus run by the president. So Melania's coin basically rug pulled or caused the whole like gambling side of things to like drop massive percentages and made people like lose their money, and it made it more obvious than ever that you just don't know what I guess Trump could do, is liable to do, is willing to do on that end, that it is mostly circus acts, and that you had better be damn sure if you're investing in the space to not get yourself involved with any of that nonsense. Keep your eyes very strictly focused on the real world use cases, which again, for the 20,000th time, to me is Chainlink and Bitcoin.
Yeah, fair enough. And maybe arguably like Ethereum and Solana and a few others, but like apart from like those top 10 or so really established projects, like most of the other stuff is, as you say, a circus. Now let me just put aside, like, because I was scratching my head about when you put this topic on the conversation for today's episode, like how do I feel about it? I mean, it's just ludicrous, right? I mean, I would be embarrassed if a leader of the UK government tried to pull the same stunt. Like they'd never get away with it. Like you've got to be the Donald to even get away with this. Does it really change anything though? Like, does it really hurt anybody? That's probably the bigger question. And I suspect, like at the margins, maybe a few people, but probably the people who got involved and bought like Trump coin or Melania coin, they were probably already like crypto bros, crypto guys and girls who thought they were playing, they knew the game and they're playing like the greater fool theory, and they thought they were going to like jump off the roundabout just before the music stopped and scam everybody else. And maybe they got scammed along the way because like Melania coin effectively like turned off the lights on Trump coin. But if you live in this space, right, you probably every week you find some hot idea like fart coin or whatever the thing was, like Hawk Tour coin a few weeks before that. and you're probably used to having your pants pulled down. Here is the president doing it rather than some like YouTube celebrity. Hopefully there weren't too many like mom and pop Trump supporters who got into crypto just because of Trump coin, and then they lost like a chunk of their wealth. That's where the real pain would be. I'm hoping that's like few and far between.
I think this is actually more severe. I'm going to be a little cynical here for a bit.
Mm.
I have to even though I've been deeply engaged in the space for some years now, call it 4, 3, and I do things legit. I read this. I go deep into the project. Most people, I don't know what the percentage is, like 95, don't know shit about crypto, don't understand the technology, don't really understand anything beyond whatever meme shit or headline they see. So when the president of the United States engages in the exact kinds of things that give crypto a bad name and like make it seem like a circus, it confuses people at best, and at worst it bankrupt, it like steals their money. And then people, the message they take away from that is like crypto is a giant, heaping pile of dung, which they're right to say if the president of the United States is doing this kind of stuff. So it's just so stupid. It's just like every crypto person that I kind of saw, the serious people talk about this, is like, why? Like, really, Donald? Like, like like it's almost, it's like, because at that point it's like he's acting against his own self-interest too, because he has massive amounts of money invested in this stuff now. So it's just fucking idiotic. I hope the editors leave that in because
Yeah, it's an
so
embarrassment, but I don't think, probably shouldn't be too surprised. Probably a little bit surprised if you're David Sachs, who's like the newly appointed AI and crypto czar, and then you're here, you've shown up for job on day one, and you're going to try and help like get crypto accepted and regulated, and then suddenly like your boss pulls a fast one like this, and like just brings even
like,
more disrepute to this space. Wow.
yeah,
Hey.
yeah. Takeaway for me though is this is short term, more fart noises, and something like Bitcoin and Chainlink are as strong as ever, and their projects have never been in a more positive background, and I can't wait to see what happens for those in 25. Which, by the way, one last thing on our Patreon, I ran a poll about Chainlink. Can we predict, asking people where Chainlink will end the year in terms of hierarchy and ranking? And we've got some interesting feedback from all our patrons. So check it out if you're interested in casting your vote and making a prediction about Chainlink.
And it's just for context on that, how big is, or sorry, where in like the strata of cryptos is Chainlink today?
So when the poll went out, it was about 12th.
Okay, so it's like
But
12th
but
biggest
12,
coin
yeah,
by market cap. Is that what you're saying?
yeah, by market cap. But you have to realize Bitcoin is like whatever, a trillion. Ethereum is, call it like 500 billion, and 12th place tiny Chainlink is only something like 15 billion. So it's still orders of magnitude difference.
So something else I've been doing on the Patreon lately is using our new Monkey and Badger trades chat group, and like we're not like guys where we're saying like you must trade today hour by hour, changing our views on stuff, but we are now using that comms channel to tell our Patreons when we've just done something, or in this case, when we're about to do something. Because I had a bunch of trades I did in my own investment portfolio. So I've kind of cleaned things up a little bit, but I did want to flag a company I've just added to the portfolio because I've just bought myself a starter stake in Remitly. Heard of Remitly?
I've heard of it. I've seen the name, but you gotta hit me with the goods, Badger.
Yeah, so it's not wildly dissimilar. You might remember like a month ago I said I bought a stake in Nubank, the Brazilian fintech. Remitly is like another fintech. And these guys are experts in remittances, which is essentially is like the majority of the volume there is like overseas workers. For in Remitly's sake, mostly working in the US. So you've got like say tons of Indian nationals and from other like lower cost parts of the world, developing nations, working in the States, earning money, sending money home, remitting money home to their family, or to buy a house or whatever they might be doing back home. And so Remitly make that process kind of digital first, seamless, low cost, fast, efficient, secure, safe. And they've got just a good track record of doing this. I like the idea of the company. I've had my eye on it for some time. I think I was reassured with, we just cast aspersions on Trump for his kind of crypto shenanigans, but he has also made some smart comments, I think, around focusing his anti-immigration rhetoric on illegal immigration and maybe being more supportive of legal immigration and things like H-1B visas. I don't think we'll see some of the nonsense we saw in his first 4 years, where it was quite difficult to become like a overseas worker in the States. I think we're probably going to see a lot of support for that. And so I feel this sort of plays into companies like Remitly and just seems like a really well-run firm with a pretty reasonable valuation. And they've just flipped into being operationally positive, I think, like 1 quarter ago. So that kind of caught my eye. I like that when companies start to become a bit more self-sufficient. So yeah, I've added like a starter 1% position in my portfolio.
So this is big news because anytime, based on your investing philosophy, anytime you add a company, I think it's a strong signal because you're not as active as I am. Same question I had for you previous week ago, I think a couple of weeks ago. Is it the banking industry itself because of your inner expertise that allows you to have more confidence in the business model or the moat that you're looking in this sector some more?
I think it's more that, I mean, there certainly is some of that. I feel like I understand payments pretty well, but it's more that I look across all my portfolio and it's hard to find reasonably valued stuff. Like most of the stuff I'm invested in, well, NVIDIA is a good example, is like pretty overvalued. But the fintech space, I found a few opportunities there where they seem to be at more reasonable valuations. Like Wise, I've owned for some time, Wise PLC, and actually it's still, I think it's a bargain. Nubank seemed to be pretty reasonable and was put on sale by like the macroeconomic conditions in Brazil of late with like hyperinflation essentially. And Remitly, they haven't taken a big hit, but they seem to be kind of reasonably valued for where they are in the maturity. So it's probably more that like fintech seems to be a bit more reasonable than some of the other sectors.
And I'd like to point out for our listeners that what tends to happen over time is when you get an interest in a particular sector, like Badger is interested in fintech stuff, it becomes easy to understand each company and their differences, and you end up acquiring that kind of know what you own level expertise, which makes it easier for you to understand the thesis, one, but also not get shaken out when some flash bad news hits and you just understand things better. So for you, I think of you as Adyen, Wise, now Remitly, and
Yeah.
well, Melly, I guess Mercado Libre is also like in that bucket, their payment section, right?
Mhm.
There's a, and what was it? New, right?
Yeah. Yeah.
Yeah.
And C Limited in Asia, like they got a C Money arm. Yeah, I got a few fintechy, e-commerce investments, and I feel like it's a sector I've got reasonable exposure to. Oh,
So the right to
yeah.
reiterate, it's on our Dolphins membership tier where you get to hear whenever we make a trade like this in approximately real time, give or take.
Yeah, and chat about it with our loyal Patreons. So yeah, absolutely. All right, should we go on safari with a couple of companies before we wrap up today's episode?
What do you think?
I think we should. I got one I'm
Okay,
dying to tell you about, but do you want to tell us about your one first?
sure. Given the intense tech talk that we've front loaded you all with, I'm gonna try to spare you here. Unfortunately, this is a really sort of tech heavy investment. So the company is called Rubrik. The ticker is RBRK. And I think of this as fulfilling a missing bucket in the cybersecurity realm. So this is why you're going to love this, Luke. This plays extremely well with Zscaler, CrowdStrike, Palo Alto, and Okta in many ways. And all of those companies are both, they're working together and they're also competing. So you have to know that up front. But the short version is that these guys are in the business of restoring your data, or like it's not the prevention, so to speak, aspect of cybersecurity, but making sure that systems are in place once, in a way, in a sense, something has gone wrong. So it's sort of, I never thought about this really, but I kind of thought like with CrowdStrike and Zscaler, you've got all that you need, right? But apparently, because cybersecurity crime is such an existential threat to companies, that for this company, which is now several $billion in valuation, let me check the exact number for you. It's bigger than I realized. It's $13.4 billion. So for a business to be this big, I just reverse engineer and say like there was obviously a market fit, even with a company like CrowdStrike and Zscaler already existing. So those guys weren't doing what these guys are doing. So much jargon I could bore you to death with, but Rubrik Security Cloud is what they call their product. And the statement is they provide a simple way to test, validate, and document the success of an organization's cyber recovery plans. Provides businesses a way to instantly recover the last known clean copy of data into production while performing forensic investigations out of band in an isolated recovery environment. So that's I think you of all people, I imagine you owning a company like this to broaden your cybersecurity basket. Their financials are, it's like for me, researching this was deja vu all over again. It's the same kind of stuff with Cloudflare and, yeah, CrowdStrike, same kind of metrics, same kind of like we're losing a bunch of money up front, but we're growing at 60% in some segments, 100% in other segments. The net retention rate is 120. Customers are just buying more and more of your thing. High growth company, not profitable right now, but the trajectory looks like they're going to be cash flow positive, approaching cash flow positive pretty soon, even though the operating losses right now are pretty severe. And so this is one of those things like based, to tie with our data conversation earlier, the more data you have, the more it needs to be secure, and breaches will happen. These guys solve the what now problem.
Yeah, I guess there's a ton of money in cybersecurity, and maybe these guys help you, like, what's that saying? Like bolting the door after the horse has bolted, or whatever it is. Like if you've had an incident, these guys can help you at least recover from it cleanly.
Yeah, and they project their TAM to be, taken with a pinch of salt, to be about 53 billion in not too long from now. So as a 13 billion company at the moment, data is not going to get, it's the same thesis with the other guys. Data is going to keep growing, and the proof is these guys have customers. So the bear case I would make against a company like this would be, what if CrowdStrike and Zscaler and company outcompete them at their own game somehow, which I, as a non-expert, have no way of knowing how close that is to happening. So far, obviously, they haven't been able to do that, but who knows what tomorrow holds. For pure transparency, I actually took a small position in this company a couple of weeks ago. So just like one of those sample size nibbles.
Great stuff. Well, I haven't bought my Safari stock yet, but it's one that's been on my radar for about a year and a half, and it suddenly went on sale after delivering less than stellar results. So, have you heard of Gregg's?
Say that again?
Have you heard of Gregg's? GREGGS? Any idea who that is?
I have not.
Yeah, it's no surprise there. Do you know what a sausage roll is?
As a vegetarian, I want to say not really,
They are
or unless
famous.
it
They
is
are
what it
famous.
sounds like.
They are famous for their vegan sausage roll, actually, funnily enough.
Oh, okay.
Yeah. So anyway, Greggs are, I suppose they're a bit like the UK high street version of, I don't know, I mean, I might liken them to like a, what's that? Or like a Chipotle, say, for example, like a sort of North American bit of a cultural thing. And, they're on in every major city, there's like probably two Chipotles within sight of each other. Greg's is kind of like that. They got thousands of branches across the UK, traditionally seen as a more sort of northern-y type. Not that I'm like advocating this north-south divide, but it's kind of, like traditional, hearty, not very healthy food. It's a over 100-year-old company, surprisingly, and they're just freaking everywhere. And I looked at them about a year and a half ago, and they seemed quite interesting because I have always had a hankering to get me some dividend paying stocks, like some income stocks in the portfolio. And they had a pretty decent like dividend yield of about 3%. Not bad. Um, but I was put off investing in them a year and a half ago because they were just going into like a major expansion phase, building like a whole new manufacturing plant in the middle of England, and then like preparing to scale up and massively increase their footprint, like the number of branches. So that put me off, and that was a mistake as it turned out, because actually the company's done great, the stock has done great while it's been expanding, but they delivered less than stellar results a couple of weeks ago, and they've taken like a pretty massive hit for like a slow, steady grower, and the stock price or the valuation is now back to really where it was several years ago. So quite tempted to add this one back to the portfolio. And I quite like the idea of having like this. I mean, I don't love the food myself. The coffee is among the worst coffee I've ever had in my life, but they have their raving fans in the UK.
Oh my God, where do I start with this? Are you about to add a shitco to your pure pristine portfolio?
Oh, definitely not.
Badger?
No, no, definitely not. This is actually a rock solid, like 100-year-old brand that has a really good ethos where
Okay.
if you work at Greg's for like an amount of time, like I don't know how long, it's like a partnership model. So actually you become like a part owner as an employee. They've actually got a really good culture. And like I say, they've got raving fans. It's almost like a kind of like meme food, because it's kind of acknowledged as being like not great in terms of health, but it's convenient and they're everywhere and it's cheap. And if we do go into a recession, which is, who knows, right? But if we do go into a recession, it's probably more likely in the UK than it is in the US, then like some of these sort of cheap eats and these staples, probably they're the kind of companies that will benefit in that kind of tight fiscal environment. So yeah, definitely not a shitco.
Okay, I'm gonna leave it to our Patreon audience to decide. Like when Badger's going on about how terrible the coffee is and and how bad it is for you and its sausage rolls, uh, anyone listen to this, please, in the comments section, let us know. Is Badger's portfolio all of a sudden does it have a little bit of a smudge of mud kind of leaked in? One follow-up question: it's why, if this is such a steady company that's like long and boring, what was the big problem that led to the underperformance?
Yeah, I don't know. I think it's just like a reduction in growth, or maybe even like sales going backwards. I haven't honestly. This is like a safari stock for me, so I haven't done my deep research. I haven't bought any shares in it yet. I'm just kind of flagging it's on my radar, but I'm planning to do that research this week because I kind of would like to add it. If like, I think you can make an argument. It's an interesting philosophical question, right? You can make an argument for buying or adding to a stock when its share price is going up and when its share price is going down, but you need to have, you're not doing it because of those things, you're kind of doing it in spite of those things. And here's a company where the valuation seems to be retracting, so I need to get under the covers of exactly why that is, and if I can alleviate my doubts or any potential concerns that it's not like getting hit because actually the brand is doomed and it's selling less stuff and its fans are maybe going off it, then I think that'll be a good opportunity to buy.
So there you have it, folks. In one episode, we went from talking to the most complex and sophisticated of technologies and NVIDIA chips and DeepSeek revolutions to shitty coffee and sausage rolls. and with a little Melania and Trump crypto coins to even things out in the middle.
Right.
So we got you covered. For any of you who want to know more and want to engage with us one-on-one, our Patreon is where we're at. So patreon.com/Wall Street Wildlife. Special shout out to Simon N, Olaf H, Richard A, RNH, and my own dear Hannah P. Thanks for joining us on this great, wonderful safari adventure called investing.
Well, I'm sure our Patreons are, and I know you and I are, Christoph. But to ask our audience, are you ready to become a beast of an investor?
Your journey starts right friggin' here.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.